Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index. No, not the US dollar index. We're looking at Bitcoin US dollar on the Coinbase chart. Why? Because the other chart's full of lines and it's out of control. Let's go to the daily time frame. Since our last video, I concocted a few different pathways which I thought Bitcoin would take, and I made these little lines starting over here with this red candle. Now what I thought at that time, Bitcoin would possibly come down to about 57-ish thousand here. Upper 57,000 test, as I said in the last video, that is the top of this red dashed line is the top of the weekly Gaussian channel. And then also in this area you have the mean band of the 5-day Gaussian channel and the bottom of the daily Gaussian channel, which I can turn on right now. As a matter of fact, since we're on the daily, you can see that the daily Gaussian channel is right there at 56,938. And well, let's just go through all these right now. So the 5-day, then the mean band is at 56,971, and the weekly, oops, that's not a weekly. The top of the weekly is at 56,347, which is good that that's lower than the other two, because if we bounce off the other two, then there's no chance of us piercing that weekly. And you can also see now that my red dashed line does follow the top of the weekly Gaussian channel there. Who knows if this future part is accurate or not, because it's constantly changing as price action changes. So there you have that. We got all those guys there. Let's turn that off now. Switch back to the daily just for the hell of it. So you got all those guys right at about 57,000, just under 57,000. You also have this green line, trend line, or the bottom of a parallel channel, which as a trend, or whatever, its contact points are bottom at about 49,000, and the next higher low at 52.5 or so. And so coming down here, retesting those areas, which I still think we're going to do. Although we did not come all the way down here as expected. Came down pretty close, within a couple $1,000s of that point right there, at about 58, I think 58.8. What does this say on Coinbase? Coinbase says that we came down, yeah, 58.8. So didn't quite make it down there, but I don't think we're done revisiting that area. So you got the three Gaussian channel lines, bottom, mean band, and top of the various time frames. You got the green trend line there, or bottom of the parallel channel, whatever you want to call it. You have also the moving average. What's there? Well, the daily moving averages are all bunched up right there, but they're all out of whack. You see, they're all out of whack. Well, you wouldn't know. The white is the 20, the blue is the 50, the green is the 100, and the red is the 200 daily. But if we switch to a weekly now, then you can also see that the blue weekly here is at 56,648. Surprise, surprise. So you got another key support level there. You got various 1, 2, 3, 4, 5. This is a tough area. So if we break through that, it might be a little bit of trouble, especially since it's the top of the weekly Gaussian channel. That might signal a little bit of trouble, and that could be why we didn't even come close to it here. The bulls kept us a couple $1,000s away from that area. Although I do think it's possible we will hit it, because it's also this trend line here that we've touched on in the past. So I do think we're going to hit it or come pretty darn closer to it in the next coming weeks as we head into the FOMC meeting. So in November we got new job data coming out in the beginning of November. We have the presidential election and various other elections in the United States, and we also have the FOMC meeting. So the election is on November 5th. FOMC meetings on November 7th. Job data, I'm not sure when that comes out, but sometime that week as well. And thus, if we switch back to, let's go to 4 hours just for the hell of it. So, well, no, let's go back to the daily, because I initially proposed these pathways that I didn't explain yet. So I thought we'd come down here and bounce off of it because of the various support levels I just discussed, and then probably head up along this channel here up to our previous our most this year's all-time high, about 74,000. Then come back down heading into the FOMC meeting, retesting now these lines aren't drawn completely accurate, but just to get the idea, back down to about 69, not necessarily to this purple line, I don't know where, but to about 69,000, retesting the previous all-time high from the last cycle. So that was one scenario. The other scenario was that we just would keep going from where we were when I started drawing these lines, and I didn't think that was going to happen, but I didn't want to rule it out, because we were feeling pretty bullish here. We were heading upwards, and I thought, it might just continue traveling upwards, but I think we're going to get this pullback. So we did not do the blue one. And the other scenario was the red one, that we also keep going up and get the pullback later. That was the CPI data. Yeah, of course. With that we would pump into the CPI data, and then it might be bad or whatever, who knows, and then dump afterwards. Now, what I do believe, though, now is things are constantly evolving. And I do think maybe that we will get some sort of a hybrid between the green and the red pathways. And we didn't make it all the way down here, and so therefore I don't think we'll make it all the way up here. Maybe we come up, and where this intersection of the red and green are, somewhere around there, then we will see another pullback. And that's around the 17th of October, next Thursday, and I'm told that has kind of astrological support for a pullback in that area as well. Now, let's pause for a second while I gather my thought. Now, today I just added this white line here on top, because I realized what we're doing. I'm like, oh my God, not again. We're doing what we always do. We are consolidating in a triangular formation heading into that next FOMC meeting. because as it stands right now, people don't know. 50, 25, no rate reduction. 0, 25, 50. Who knows what it's going to be? Are we going to get that liquidity we're looking for? Do we need it? I think people make a much bigger deal. I think that's just the anxiety around whether we're going to get it or not is a bigger factor than whether we actually do get it or not. Because all the money is out there. It's just sitting on the sidelines, waiting to be deployed. And I think that's the big thing here. Is a lot of people are just sitting around and not deploying or have their assets in safer places than waiting to see if they are certain enough to put it here. So white line. Now, is that completely accurate? I don't know. I pulled it off of this line here, and I made it kind of more symmetrical than if it was just coming down like this, because I think we will, although maybe not right now, go up as far as the line. I think we will. Well, we're going to consolidate over the weekend and then maybe head back up to the line over here about 64,000, 64 and a half on Monday maybe, and then head back down, and that'll give us, maybe something will happen with the Israel will attack Iran or whatever, who knows. We'll get something that'll give us enough fear and uncertainty to bring us back down here to, maybe we'll hit about 58,000 again. Now, what would be interesting is if we about 58.8. Where is that? That would be at the end of the month. So see, I don't think we're going to get a green October. I think we're going to get a red October, which is then going to bring about a lot more fear and uncertainty in people. What is October anyway? So October started at about 63.3-ish. It looks like from these monthly candles. 63. Yeah, about 63.3, I guess. We could very well get a red monthly candle for October. If we came all the way down to But if we did that, look at the pattern. Red, green, red, green, red, green, red for October, and then green. And November would be the big green candle that gets us all the way back up here and beyond. Anyway, so we'll leave it there. Like, subscribe, or don't like and don't subscribe. Do whatever you feel like doing, but really like and subscribe. And we'll see you next time.